The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday at this time. And what's really important about this Tiger Technicians Hour, this is the moment that we've been waiting for. We've been waiting to see whether going into the election close, there would be the same sort of thing that's happened so many times historically, and that is that we would see a 2-week or maybe a 1-week run towards the upside as some kind of a base is formed. It's just part of the political process. And what are we doing? On Friday, in the Chapman wave methodology, there was a reading that I call the Chapman wave trend gauge. It was very high, and it suggested that within 1 to 2 sessions, there should be a 9 to 11 point move in the S&P futures would impact positively the S&P cash and the Dow cash. Well, we've got that. So what does that imply? Let me go through this. I'll use the chart that I'm showing right now. It is the E-mini. This is the daily on the left, and it's got the arch formation. Remember the H that goes to a lowercase m. That's what we've been anticipating. And you can see this is leg C now in the daily chart. The MACD's just crossed positive. It's not very, it's not in a strong, how can I put it? The histogram, those vertical red lines, haven't yet crossed positive to above 0%, but they're okay right now. And it's a nice turn to the upside. And the stochastic is routing, is still only at 51% rather than the 80% plus that I like. So this is a good bounce off the low of 2107.75 made 2 weeks ago. However, this is the pattern that concerned me over the weekend. When I had the reading of the trend gauge, when I looked at my Dow Quartet, GE, IBM, Triple M, and UTX, GE came back really strongly after just being smashed to the downside, but it held a key support level in the weekly chart that I've been talking about for subscribers. And to top that off, Triple M and UTX, well, I've got GE and IBM. I'm just going to leave IBM out for the moment, but Triple M has had a really sharp pullback, and it was at support at a 200-period moving average support level, and UTX, United Technologies, same thing at a very important support, and there was a chance that it could bounce. And if the dollar, which is in leg D at this particular point, see, I'm trying to put the whole package together, the dollar, which is at peak D, continues higher, we will see whether or not the dollar is going to the anticipation of the dollar rally, I think, has also been part of the cyclicals and heavy-duty Dow-type stocks that have pulled back so sharply. But this is the pattern that's really important. Look here, this pattern, where you go from a potential H pattern to saving the day. If there's a break to the upside in the Dow, at the E-mini, it doesn't have to close. It just needs to get, first of all, above 2163.50, the high of the week of the 14th, and that'll suggest that there's a potential for a cup formation. I call this the Sears Holdings weekly pattern that I identified, I don't even know how many years ago, but it was a real shock to me when the H pattern suddenly turned into a very bullish pattern where it retested the highs, and then it came back down. And that the high in this case is 2185. I'm not ruling that out. Why? Because some of these Dow Quartet stocks have been hammered so badly, they at least deserve a bit of a bounce. And I thought that there's a chance they could participate. We don't know. I'm just saying there's a chance. So now I can run the numbers. Let me just show this 10-minute E-mini that I always do every day. See that double top? Peak F in the Chapman wave, pulls back and it makes a leg. I'm going to call it a G for now, because if there's going to be a higher high, if it takes it out, it has to be considered a new C or a brand new move. So let's just make the high of today 2149, the round number high. Absolutely imperative over the next 2 days to monitor. If there's a break above it, yes, we do go higher. Okay, and the support, of course, in this case will be 2142 to 2139. A takedown later in the day would say, okay, just another one of those bounces that fails is what we've seen over and over for a couple of months now. A couple of months. Here we go. Dow, INDU. Excuse me. This is leg B in the Dow itself. At 18,238, up 92.83, hit a high of 18,275. There's a 120-minute chart. I'm going to call this a leg D. There, see, there's a B. It pulls back, and you've got an inside peak A, peak B, peak C, and we got to a D. Now you've got to be careful. Why have you got to be careful? For two reasons. One is, I didn't do this. I'll do it right now. I'm just going back to the E-mini for a moment. And this E-mini, I do the continuous contract, which has exactly the same price as the December contract. What I want you to show is right there, you've got a peak D at 2149 right there in the 120-minute chart with very good MACD, strong 90% stochastic. If that fails and you suddenly start to take out 2142, the 9-period exponential moving average, that stochastic will drop very sharply. But in the meantime, I think there's a little bit of what I'm calling a kind of a relief rally in the market, saying this has got nothing to do with what you and I think politically. This has to do with the market thinks politically, and it's thinking that, hey, maybe status quo, and status quo has been good for the market thus far, so we'll see. If it's unstatus quo, you'll see a sudden pullback very sharply. Let's go. So we got the Dow up 90, INDU. No, missed it. Do it again. INDU. There we go. Okay, going right into the Chapman wave inside track repellent area, and that repellent area can go all the way to 18,290s. That's going to be really important to hold. And if it breaks right through in the next 2-3 days, that's going to be very positive, both for the daily chart and then for the weekly chart. Meantime, you've got 18,001. I'd say 18,190 to 18,150 is going to be really important support if there's going to be a breakdown. But look at the monthly chart. I still love that monthly chart. Shorter term, I still think it's lower highs and lower lows. That's the positions we have for my subscribers. Now let's go to the S&P, SPX.X. And the S&P, I need to just quickly keep checking this. Where did it go? Where did it go? Got it right. Haven't got it. All right, I'm going to keep going. So we're looking at the S&P. This is a leg B as well. A very strong resistance in the it's at 2152, up 1165. See, the weekly chart is not as good as the Dow. In fact, the weekly chart lower, the MACD and stochastic, like the Dow weekly charts, are very poor. But the price of the Dow is slightly better in articulating the potential for a cup formation than the S&P. So parameters to watch. 2143 has to hold this week. Otherwise, it's going quite a bit lower. But I don't think it's going to break the lows this week. The lows that were made 2 weeks ago at 2138. Well, let's go on. Oh, there's the break. So let me do this quickly. Gold, the GC contract is down 5 at 1262. As the dollar, I love it. The dollar is still screaming leg upside, and it's made a new recovery high this week in the weekly chart. So this continues leg D. I'll do the rest of the interviews as soon as I get back. Basil Chapman, Tiger Technicians, at an undisclosed location. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi to Vic in Austin, Texas. How you doing, Vic? We're back and we got Vic. Vic, are you there? I believe. All right, Vic, if you are there, just yell at me and say, I'm here, even while I'm talking. You want to look at UNG, United States Natural Gas Fund, and as I'm looking at it, I'm looking at the daily chart, which made a perfect PD on the daily chart on the 22nd of September at 9:02. It pulled back, the MACD and stochastic pulled back, but then it ran up again. And that I have an alternate count, E/A and F/B. And what I'd said, as I looked at it the other day, is I said, if the stochastic suddenly turns down and the MACD turns down, I don't believe I was looking at it in that bar, so I wouldn't have said it, but I must have typed it at some point. But certainly a close below 937 starts to say, more like an F than a B. Today's action says that it's probably an F. And that says be a little careful here on the shorter term. Why? And the reason being, within the context of the moving average convergence, divergence, and the slow stochastic, and the weekly chart, which is still very strong, but the MACD is still very strong, but the stochastic's actually at 80%, but it's really much, much weaker than it was way back when it made the high in June, I believe, first week of July, end of June. Yeah, July the 1st. It made a high of 887 at a PD, and then it pulled back. I'm thinking that, now I don't know whether you're long or short, and I'm going to just do it this way. Vic, if you don't mind, I do like to look at situations and saying, would I buy, would I sell? Just make it as simple as possible. The question of would I buy is I say, no, I'd have to hold on. I'm not sure if this is the season for United States natural gas. If natural gas at this particular time, this is where it's being bought and orders are I should imagine it is, coming into the winter. But the most important thing about it is that the seriousness of the rally up and the V-shaped, inverted V-shaped slide is not that it hasn't done it many times before. In fact, that is a characteristic of this daily chart. Let me open it up for you and show you. And Vic, if you're there, you want to call and talk, that's fine. But what I am going to say is, if you're long, I would just make it simple. I'd have a stop under today's low. Why? Because if it takes at 885, it's at 893 right now. If it takes at 885, I think that it's going to test the 9-period moving average of 853. Not a big deal, but it is a big deal in percentage terms and in terms of the trade. Where would I consider buying it? And believe me, this is one that I followed quite closely, and I missed the buy on the earlier on. My focus was more on the crude oil, how it was about to top out in a peak D. So I kind of missed this. I just put the notation, but I didn't do any studying. My thinking here is that if it fails on the downside, if it goes under 850, there's a good chance that 853 level, the 200-period moving average, is going to tell me a great deal about time. It's going to say that natural gas might need about another week to form some kind of a base. However, if it starts to move above $9, 914 actually is the 9-period exponential moving average. So if it goes, it's at 894 right now, UNG, this is United States Natural Gas Fund. It's the vehicle that you can trade natural gas. Well, if that's the case, then I suspect it's going to try to double top and make a G/C in the daily, but no, that's not it. The issue is that it then makes a leg D in the weekly, which can be a negative. That's where you want a little bit of caution. But at the same time, if we can get that high, you've raised the base of support. And that's really important for the monthly chart, because the monthly chart at this stage is, with less than a week to go, we've got a week to go, 24. Yeah, less than a week to go. You've got you're above the 9-period moving average in the monthly chart for the first time. So this is actually quite good action. So what would I like to do? I'd like to prepare to buy it if it pulls back a little bit more and then stabilizes and starts to rally. I want to buy the rally after a dip. But if it holds right now and goes to 914, I'll have to consider a higher level of entry, smaller position in a higher level. And there, if it goes to 916 above the 914 9-period moving average, I would actually do a little nibble, just a nibble, and then I would increase that. I don't usually say this, but I'd increase it as it rallies. If it rallies, why? Because that weekly chart is still very strong and the monthly looks good. Hope that helps you. I've done my best there, and I don't know your position, but that's the way I look at it. And all I can say is if you are long and with a comfortable margin of safety, then why don't you put a stop on some of your position at about 884. And if you're taking out, you'll be able to put that back. But I don't want to mess with your major position. I just say, just be a little careful, because if it pulls back that far, that inverted V shape, I call this the right arm extension, fading mode. So it looks to me like it has the potential to come back a little bit more. Okay, so now let's do a couple of things. I didn't finish what I was looking at. Let's just go to the QQQ series, because they've been helped by Netflix and Microsoft and a couple of others. So this is still leg. This is peak D, very sharp V-shaped recovery, gray A, gray B, and now this is a gray C. When I say gray, it means it's still underneath the previous high of 119.48. We made 119.45. The moment it takes out that high, that's going to be very different. All of a sudden, you reactivate that D and you call it an E, and it becomes an E/C. Maybe a brand new buy mode, maybe just a completion of the former one. I will have to study the technicals, which are rallying, but they're not all that strong. This is the price moving up without the technicals, but you've deflected high in the weekly chart. The MACD is good. I would have to put this as, if it goes to a new recovery higher at 119.49 or higher, then I have to consider this as F rather than F/anything. Just an F, but it's still running quite nicely. Monthly is really terrific. And the daily, the 120-minute chart, this could be an A. So NASDAQ, the QQQs, NDX 100, looking very strong. Now, let me just double check. Yep, I double check. Now we're going to go to, I'm not sure about the DEN. I don't want to mess around with this. I'm using this remotely on my desktop back home. I love technology. I've been doing this for about 12 years or so. Wherever I am in the world, I can go right there. If everything works out, I'm doing my stuff as if I was right in the office. Not 100%, but close. So here's this important thing. IWM, which is lagging quite badly, try to rally today. It's pulled back, but the weekly chart is not strong at all. And that's kind of a warning. That's number one. Number two is the VIX index. The VIX index, as I said to the subscribers over the weekend, pull back sharply. If it goes to the 13, so that's always a good sign. It means there's buying potential. Here we are at 12.97. We're in the 12s. It looks like 12.58, the dashed rising trend line is going to be really important support. But that weekly chart says, hey, this is still very bullish for the market, based just purely on the VIX index as it stands right now. The daily V-shaped inverted V, Eiffel Tower, decline straight up, straight down like an uppercase A. The weekly chart is trying to make a U-shaped pattern, but it's really failing badly. It's way under the 9-period moving average of 1376, almost $1 lower. And look at the monthly chart. Monthly chart cannot, it just has not since back at January, the first week maybe January. Did it do that in February? Yeah, that February low. That's right. So in February, let me just double check. No, this goes all the way back. Yeah, this goes all the way back. Yeah, February, where it closed above the 9-period moving average the monthly. Since then, it hasn't. So that's what I'm saying. I'll be back to talk a little bit more about this market.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we're looking at the 10-minute E-mini, and you'll see the cup formations when Chapman wave methodology. We call this, it's like a reverse Y, or the lowercase h upside down. What we're looking at here is that second potential for the cup. This is really an important moment. The E-mini is up $10.50. It was at 21.45.25. It was, in fact, at 21.49 round number high, right there at that peak G. What's really important about this cup formation is that when the price pierces, it goes 1/3 to a half below the cup trough and the lip high, it says that it could be a test of the low. Boom. We just did that. We went 2142.75 to 2149, and we came back to 2142.75. 2142.75 just happens to be the exact low. That makes this really important. Why? Because if now there's a little H pattern and you suddenly see by 150 to 220 this afternoon that the market can't hold, and that at 2144.25 it's starting to take out that low, that suggests that it's going to give back a chunk of the gains, and it's going to go all the way back down to test this level and then take it out. And then if it takes it out, you've got a 1-to-1 to the downside. So that's why it's important for this to hold. And at about 1:20 Eastern time, that is, you want to see the VIX start to rally. I'm sorry, the VIX holding well, that's it, holding well. The VIX will start to rally if we're starting to come down. That's what I meant to say, right? But the VIX starting to come back towards the lows of the day suggests that it's going to try to break that level and take out that peak G. And we've already got a peak D in the 120-minute chart, which usually completes a move. You might go a little higher, but that's what we're looking at. So this is a very important moment on a number of fronts. So I'm going to show you something very interesting. If you look at the Investors Business Daily top, I'm not going to go through the top 50, but I'm just looking at the top stocks. NetEase is trading at 266.74. It's up $3.21. What's really important about this is that it's about to test its high, and I'm finding that many of the very best of the IBD top 10 are having a mixed performance, and that's saying to me that there isn't a unified buying in the funds. Let's go to Scott. Scott in Florida. What are you looking at, Scott?
Back at the doorstep of potash. It's got such a sign of strength here, in my opinion, that I'm wondering if now is an entry point, even at this a little bit of a higher price.
Okay, so two things are going on. One is that you did have a position, you've taken it off, or you are holding a position.
No, that was taken off at a very large, profit. I'm very happy about that.
So, okay.
But I'd be getting in back now higher than I sold it for.
Okay, now that would be very unusual for you to do, and this is in P, A, B, C, D, E, F. This is in F, and it's a little bit stretched. Now, if you want to day trade, I think there's a little bit more left in part. Well, first of all, let me talk about two things. For those of you listening, potash POT is trading at 16.57, up 16 cents today. It does potash and other minerals. Most importantly, I discussed with Scott the chance that this particular pattern could turn into a very bullish. It's an H pattern, a Chapman wave H pattern, a lowercase h, that is, that if it's successful and there's actually a buy signal that is triggered and it closes above the arch of the left side, in this case the day of 29th of September with a high of $16.50, if it closes above that, and it almost tried it on Friday, it just failed, it went above, it didn't close above, now all of a sudden it's got a very strong candle. That turns into a very bullish reading, and it could have a complete peak A, peak B, higher peak C, and then even a D before it comes back to retest the body, not the whole thing, but the body of the H, meaning the starting at the top, which is at 1650. So let's go through this real quickly. I'm going to make the suggestion, since you've already made quite a bit of money on potash, that you dedicate it really has to be just a small part of a portfolio to buying it here at 1656 and holding it overnight, something you haven't done for a long time. The two reasons, absolutely. Now, the two reasons why I'm thinking along those lines, the first is because of the pattern in the daily. The weekly is still not that great a looking chart formation, but the MACD is rallying, the stochastic is rallying. That's a good sign. I can't even talk about the monthly because it's so horrible, but the monthly is just beginning to show an improvement. So here's my thinking. If you dedicate a small amount, I really do mean a small amount. It's almost as if it's one of your daily positions, but it's your starter position. Right. I'm going to suggest as an experiment, that position at 1654 right now, I would not even put a stop of a small stop. And normally I'd say a very tight stop. In this case, it's a position that says the only way I'm going to find out if this has got legs, if it's the weekly chart is improving so much that it's going to actually move higher with maybe the other commodities, the only way that could happen is if it really starts to tackle, and I think I spoke to you about this before, the 1680s to maybe the $17. That's another ball. That's just different completely. And that's really what you want to be looking to. So that's why I'm saying start a position here. And this is one that I'm going to suggest a stop of $16.22. You know, that would be 2%. That's nothing that I would normally do in your case. But this is different. This is different because everything about it is turning the whole chart formation into an inverted arch, which is like a cup formation, and I like it. And I would also like, in this particular instance, for you to go back to what you had done for a little while with Potash and Alcoa and CX, that you will actually hold them a little bit longer. You actually held them overnight. This is where maybe you can start thinking about this will be the test of whether you're holding it overnight. And that's got nothing to do with your intraday trading. This has to do with a position play for the very first time, because at least as we're looking at it right now, I've got a confirmation that, yes, the 120-minute chart is a little bit overbought, but a 15 cents or even 20 cent fluctuation is fine. That in fact, it would be nice to have a little bit of a breather. You know, you could wait to do that. I'm just suggesting that it might pop one more time tomorrow and then give back a little bit more. You're already in, and it might not give back all that much at that point, because I would be raising the base on that. If it even goes to 16, what's the high? 1659. If it goes to 1668, I would raise the base to 1631.
Yeah, I agree with you completely on it. I mean, you read my mind absolutely. You're just spot on, Basil. And I think that there's a good portion of people at TradePod out there that have that, since it set the precedence of before of being over 17 on that merger thing, and now that they have merged, I think people have more of a confidence. And POT, you're right, does trade independently of the market. There's many days the market's been in red and POT's been in green, so it really depends.
It also trades sometimes independent of some of the other stocks in the commodity sector.
Oh,
so
absolutely.
That's my recommendation.
It's connected not at all to any other commodity. It's very odd.
Correct.
But you know what? It is a separate commodity. There's nothing like it. So.
That's right. So thanks for calling and congratulations, and that's the trade. We'll be back.
Thanks for you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just announced a special offer for subscribers to his trading service, Fibonacci 24/7. Right now, you can get a month of Larry's Fibonacci 24/7 while gaining access to his upcoming live webinar, The Pattern That H.M. Gartley Missed, taking place Wednesday, October 26th. This live workshop will be archived for subscribers if you cannot attend live. And if you order right now, we'll also send you a copy of Larry's book, A Trader's Guide to Financial Astrology. This book retails for $90, but we'll send it to you as part of this special offer that runs through the night of the workshop, Wednesday, October 26th. Sign up now and get a free copy of Larry's book, a month of his Fibonacci 24/7 trading service, and a live workshop on the pattern that H.M. Gartley missed. With a 30-day money-back guarantee, this is an offer that you can't let pass you by. Sign up today for Fibonacci 24/7 by visiting the front page of TFNN.com. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. I'm looking at telephone. This is a stock that we had in the 34s from last December, and we held it all the way through. It went to a high at 43.89. I said at that point, for some people, you can take a little bit of a swing trade if you want to take off, but we're holding it because it's got the dividend set. But as it was coming down, I said, I don't like what I'm seeing. I'm not even prepared to hold it through the next dividend, and we took our profits, I think at about, was it 40, maybe a penny under or something like that. Very nice gain plus the dividends. And then I said, you know what, we'll try to get it again at 38.20. Well, the low was 38.21, so we missed it by a penny. It ran up a little bit. It ran up in percentage-wise. It was very nice. It ran up to the 31s to the 30. Good grief, did that go to no, don't make me upset. Did that go to 39? Yeah, went to 39. And we weren't in it. I just said, you know what, for the 50 cent, whatever it is, dividend, I can't remember offhand, it's just not worth it because I see more than a point to the downside if it doesn't hold. Well, we did not get into it. And lo and behold, what did it do? Of course, it got the takeover and all that stuff. And now look at it. It tests 36.30 this morning. And it looks very much like it wants to, it's getting close to the 35.65 200 period exponential moving average. But that's that Eiffel Tower, straight up, straight down pattern. And even in the monthly chart, which I have as a peak C. So I'm really concerned that there's something going on. Not only that, I'm getting information. I think it's every single day that I get 3 sources of email about Fios from Verizon. Now, I have Fios, I have Comcast, I have a mix of everything. I have other as well, a backup, whatever I need. But most importantly, what we're looking at here is even Verizon is down. It's down to 48.39, having made a high right there in the 56, 57 area. Peak G, that's that right arm extension failure mode. Wow, that is a terrible one. And there's that Eiffel Tower. So we're looking at, and what I'm going to be doing in a week from Wednesday evening is I'm going to be having a webinar. Now, you know, the last webinar I had was the all-time highs to come, and I discussed areas of interest and concern. And even before the webinar, we made the all-time high. Now I'm talking about, because the monthly chart, let me just go to this, a monthly chart, INDU, is still only at peak C. There should be a D, but the S&P, and I can't believe that historically it happens. Oh, I don't think it happens more than once ever. In fact, I don't even remember it happening, where you didn't get the weekly or the monthly chart of the S&P to also get at least to a D, or one of them goes to a D and the other to an E in the monthly, and that's only at a B. And this monthly, or the weekly chart, as I said before, is not great. It's not horrible, but it's not great. The technicals are, geez, they're holding in. So my thinking here is that we will be going to all-time highs. The question is when, how, what is going to be involved? I think we're done with now that whole communications area. I think there's some fascinating areas now that are starting to show signs of life. There are areas that I'm looking at, haven't done anything yet, but I'm looking at them and I'm saying, you know what? They could come alive again. And that's what I'm going to be discussing a week from Wednesday, just for subscribers. It's archived for the month. Hey, I think this is a perfect opportunity. What will work and what won't work. And in fact, we're just starting to set ourselves up that if my analysis is correct, we're attempting to nibble and start looking at positions. Now, something that I just want to look at here, take a moment. I want to look at, so that's, go to the front page of TFNN, check it out. You'll see my webinar coming up a week from today. Don't forget, fabulous workshop, I'm sure, is coming up with Larry Pesavento, and that'll be this Wednesday. I believe it's Wednesday night. Also taking on a Wednesday night. Check it out. You know, Larry does just fantastic work. We got wonderful hosts here, and Larry's just superb. So check Larry's out, and a week later, I do mine. What's really important about it is that you will be able, within the context of the market, I'm hoping that it works out, to start positioning yourselves, at least to know what you want to be positioning yourselves in for the upcoming phase. And that's going to be really important. I'm going to be discussing gold. I'm going to be discussing at least goals, the way I'm thinking gold's place in a portfolio should be. I'm going to be discussing the dollar, why it's so important for those of you who do foreign currencies to be looking at the dollar and what it means to be right here in leg D in the daily, leg D in the weekly, and waiting for leg D at 100.52 in the monthly if it's going to come. What's the impact if it does that? What are the chart patterns that we always look at in the Chapman wave that suggest that this particular pattern here, if you had to invert it, we know that pattern very, very well. What are the expectations? I'm really looking forward to it. I'm looking forward to it for two reasons. One is it's going to be the challenge for this coda phase that I've spoken about for so long. What is the coda phase? This is the phase that tells me when Boston, I showed subscribers the other day, I always wait for this, the announcement that they're going to have over 1,000 new hotel rooms, and they're always tied to the relationship of the convention center and all that. As long as I've been here, just as long as I've been here, you can go back and find that exact quote. It doesn't have to be 1,000, but it's usually hundreds and hundreds. It's usually about 1,000. Sometimes it's even more. Look at that quote and then measure the months left in the real estate market before it starts to top out. Does that mean it's going to crash? No, I'm thinking that it's going to rotate through the different sectors, the Northeast as one sector, and then the coming back Southern and Midwest of areas that were really hit on the last recession back when housing made its high in the 2005s. What's that going to do? Why call it a coda phase? I'm going to be discussing that. And I think for those of you who have portfolios that you want to protect and you want to be looking at and you want to know what to do, I'm going to be discussing this in great detail. Is this where you want to be 150% invested in leverage? Is this where you want to be 50% invested and 50% in cash? Is this where you want to still have bonds? What's going to happen to bonds? Look at the TLT today. The
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back. Basil Chapman. We're okay. All right, well, we'll keep going. And let's just finish this up because we've got this last segment, and it's really important. And what I was saying before, and I'm not sure. Economy, it's talking about the industrial part, and it's talking about where we are. Let me just get this back here. Where we are in perspective of what companies are doing in terms of looking out, and they're not buying, they're not renting Cintas. Let me just go back to CTAS, and trading at 106. It was at 119, almost 120 bucks, all-time high, and now it's way down. It's telling us something, but wait a minute. Suddenly you get Harley Davidson. Harley up there, up 48 cents today, 56.84. Do you realize a week or so ago it was in the 48s, 10 points lower? That's discretionary income, folks, and that's saying that there's a big dichotomy in this market, and that's basically what we've seen. That's why we've seen some of the Dow stocks doing very well and some of them not doing very well. We're even seeing it in sectors. Look at how American Express responded to earnings the other day, and it was doing very poorly, and all of a sudden it comes out and it's doing well. So I'm going to do this as we're looking at this. Let me just double-check here. I need to keep this in mind. There it is. One more time. Okay. What we're looking at is there's money around because markets that move towards highs tend to increase people's comfortability factor. If I'm looking at a hog,
this particular pattern has a Chapman wave squash pattern in the MACD and the stochastic, and that says there's a chance that if this isn't a single leg A up, and Harley-Davidson at 56.87 over the next 2 weeks. And in fact, there's a beautiful Bukowski study that was done in the latest Stocks and Commodities magazine where he talks about this very pattern, the spike up. I'm just saying that based on my work, all it needs is to be able to hold the 55, let's call it 55, 50 to 55 area over the next 3 sessions, and try to make a new recovery high. I'd love it if it made a lower high, so it made a peak A, and then made a new leg leg B. That would be really good action. And that's the reason why I don't know now at this particular point if I want to get overly bearish. So we've lightened up our positions. We still have some short positions. We also have some longs, and we're trying to add certain longs and certain shorts. And I'm looking at this and I'm saying, I can see, I did the work over the weekend, I can see the defense sector being weak. I can see certain sectors. I can see the XLF acting very well. The BKX, I did a study on that, and it was acting very nicely. So the XLF today is up 9 cents. Not great, but it's holding okay. But the IYR, because some of those REITs came out of the IYR to go, they were also in the XLF, and they are out now. So the IYR is struggling. This is the iShare Dow Jones U.S. REIT index, and it's the commercial real estate. So this is a very mixed market. So I don't want to get too tied up at this particular point because I think we've got another choppy period coming up going into the coming few days, and I want to see where we close today. And it's just real simple. I've got the U-shaped pattern, but I do see that some stocks might independently want to move up, or if they fail, that's going to be a very good sign. There it is, the resistance. Dow's up only 82. If the Dow closes today under a plus 60, that's a negative. If it rallies later on and closes towards plus 96 to 110, or even higher, that's a very big positive. I've got my parameters very clear, but there are certain sectors that are not working well, there are certain sectors that are failing, and before I do anything else, stay tuned. You've got fantastic shows coming up all day, and I probably won't be able to make it tomorrow. I'm just going to treat it as the parameters to watch are Dow. If by Tuesday's close, they're Dow over 18,290's resistance, that'll be very positive shorter term, and a Dow under 18,170, 18,170 says, pattern just continues, the lowercase h goes to a lowercase m. And I think we're about to wrap up. I can't hear the music. I'm not sure. Yep, I can hear the music. Hey, folks, have a fantastic day. Don't forget, check out my opening call. I think you'll find it really intriguing and interesting and hopefully profitable. And I probably won't be back tomorrow. I'll be back on Wednesday.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,